critical lesson for you to learn about watching the news with the stock market. So today I just typed in stock market news into Google, right? And let's see what it brings up. So this is absolutely critical for you to understand. Let's just look at these articles here. I'm not even going to look really at the articles. We're just going to look at the headlines right now. So you'll see here, okay. Dow falls more than 500 points. Yep. And then here it says, NASDAQ slides as tech rout continues. And that is true. But then, over at Bloomberg, that's Yahoo. And then Bloomberg says, tech leads stock gains. Well, wait a minute. Which is it? Is the NASDAQ sliding and a tech rout? Or is the tech leading the gains? All right, so let's look at a couple of others. We'll just go. This is all on the same page, all on the same page of the Google search. So then we come back down here and we see, okay, so the small cap rally has legs, says Citibank's stock strategist. But then over here, we have another article as why the stock market's rotation in small caps will be short-lived. Contradictory. So how are you supposed to know what is the truth? And here is the truth. We don't know. Nobody knows the future. All right? Nobody knows the future. So analysts can be very smart people, very, very intelligent. But what I want to do is I just want to look at what is, and that is what is the price action doing? What is actually happening with the markets? Going over here to an article in Business Insider, they say the stock market is flashing warning signs as tech shares are evaluation time bomb. That's by Jennifer Soar, and that's from Sujan. Now, that actually has this is a very interesting article. I encourage you to go ahead and read it. But let me scroll down here a little bit and show you something that's very important for you to realize that is just pure fact. This is data. All opinions aside, when we talk about tech, it is a very, very important part of the overall market right now. So, for example, here it tells you that tech evaluations are a big signal that something has to give. The sector has swelled to 35% of the total S&P 500. So when we're looking at, like, for example, the NASDAQ or the QQQs, it's not really as uncorrelated as it has been in the past to the S&P 500. In fact, as they go on and say, that's the highest portion tech stocks have accounted for in the benchmark index since the early 2000s. And that's very important. So one of the points here is to understand that markets continue to change. And it's just like they say, that the only constant is change. So there's sector rotations, things that go up and down and around. So don't get too focused on any one thing and say, okay, that's how it is, and then get entrenched to it and trade off of that. You need to be constantly, as they say in football, keep your eye on a swivel because things are always going to change. Now, let's go over to a chart, and I'll show you exactly what I mean. By the way, before I go over to the charts, you might as well get my free indicator that I give away to all my viewers, and that is my cycle indicator. And again, that has to do with timing, how to time your entries, how to time your exits, and it's my scalpel tool that I use to enter to the penny, to the pip, to the tick, absolutely free with a tutorial. Just go to indicatorwebinar.com. There you get the tutorial, how to set it up, and everything. My gift to you. Okay, let's go look at the charts now, because the charts never lie. When I say the charts never lie, the charts are just showing us the price action. And that is sharing with us the supply-demand imbalance. More demand than supply, prices go up. More supply than demand, prices go down. When it's evenly balanced, price just kind of chops sideways. So that's the reality, despite what everybody talks about in the news and all of that stuff. And people have opinions. I'm not saying those opinions are bad. There's some very smart people out there talking, and it's not necessarily bad to listen to them. But ultimately, we're not predicting the future when we're trading. We are using money management, risk management, and price action. So here is price action. So when I look at these markets, and this goes back to the articles that we were referring to, I've got 4 markets up here right now. And as you can see, hopefully, yeah, pretty good. Okay. So I've got the S&P 500, and that's my black line. And then I've got the Qs, that's the tech we were talking about. IWM, that's the small caps we referred to. And then the Dow is referred to briefly as well. So these are these 4 markets here. And I've got them as line charts. Now, what's different about this chart, if you look over here, you will see that there's no prices over here. What's actually over here are percentages. So they all start out at 0%. See if I draw this over here, 0%. So this is called a price change chart. Actually, different platforms can refer to it as different things. But I love this. I like to call it a relative change chart because I'm using it, even though it is a price change chart, I'm using it to see how one market moves relative to another. And as I said earlier, keeping my head on a swivel, looking for those changes. That's where the money is. The money is looking for when there's a rotation from one market to another and get into that early. That's the professional way to trade. So let's take a look at this now. Oh, by the way, before I move on with that, I'm sure some people are going to ask, as you should, how do you create this percent change chart? So I'm using TradingView. So I can't tell you how to do it on every trading platform, but on TradingView, go down here to this gear, and I'm left clicking it, and I go up here and I choose percent. So that's how you do it on TradingView. All right. So now the S&P is the black one. I use that. That's the benchmark that most funds are measured by. So I always use that as my black line. Then we've got this orange one, that's the Qs, that's the NASDAQ. By the way, it highlights it here when I click on the line. So you can see that, yeah, the tech was outperforming the market, and now, it's coming down. This one here, this cyan line, light blue line, that's your small caps, IWM. And then this is the Dow. So what you could see is, indeed, we wouldn't want to, so tech stocks is where we wanted to be back here, entering as it started breaking out and outperforming. This is, by the way, one way you can outperform, or at least attempt to outperform the S&P 500. And you would be able to do it, okay, if you followed along with this. But again, you can't just stick in there because things are going to change. So then we got to look for, all right, when are we going to see this change? Well, where we see it is right in here. This is where your small caps, IWM is the Russell 2000, by the way, which is a small cap index. And boom, now you might say, but wait, they're both up the same amount, about 4%. But no, it went from down here, negative 3.6%. to positive 4.5%. So that's our gain, over 7% up instead of just 5% up. And so there's 2 techniques. Let me leave you with 2 techniques that I use here. The first thing is I'm always looking for the market that's underperforming. I'm not looking for the one that's outperforming. I'm not chasing the market. That's already left the launch pad. Okay, and everybody's already on board. I want to get in early before everybody else. So I'm looking for the underperformer that's going to start outperforming. So I'm watching the Russell 2000. Okay, and you can use something as simple as just looking for the market to break out of this level right here. And as soon as it breaks out above these highs, boom, get in right there. And now you're making, let's see if I can bring up an arrow on this. Now you're making that much money instead of that much money. Okay, so that's the difference in your profits. So relative strength. And this is how we look for it on a chart. So I will watch the news, I'll look at that, I'll see which one's underperforming. And then it takes patience. It takes patience. Watch, wait, be patient, and get into these underperforming markets early. And I think you'd be very glad that you did, because this is how you can really capture the big gains. And by the way, it's not just these 4 indexes. You can do this with other things, other sectors, industries, commodities, copper, gold, palladium, currencies. It doesn't have to be just these 4 major indexes. In fact, it shouldn't be. You should be looking at all these different uncorrelated sectors and industries. Again, get my market entry indicator. It's absolutely free. Might as well pick it up. And I just give it to you, and I give you a tutorial, and it's at indicatorwebinar.com. So you get the little tutorial on how to trade it, how to set it up on, it works on pretty much any trading platform. And it's used for getting into your entries with precision, to the penny, to the pip, to the tick.